The Dow is lower and the stimulus deadline is approaching. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of Heise Says US. Grab your stein of coffee or your cup of joe and let's have a look at this article from CNBC discussing the Dow closing more than 400 points lower and 1 day left until Pelosi's stimulus deadline. Now if we jump over to trading economics, we can see the Dow Jones is indeed, down 277 points from the recent little high of 29,128. We're sitting now at 28,331. The S&P 500 is also down to 34.55 and the NASDAQ is down to 11,734. So they're all starting to go down. Are we seeing the formation of a dead cat bounce perhaps here? We'll have to see. All the TA gurus can let us know in the comments. So, stocks fell sharply on Monday ahead of a key deadline set by House Speaker Nancy Pelosi to reach a deal on new coronavirus stimulus before the election while COVID cases rise. The Dow Jones Industrial Average closed 410.89 points lower, or 1.4%, at 28,195 earlier on in the day. The 30-day stock average was up more than 100 points. The S&P 500 dropped 1.6%. The NASDAQ composite pulled back 1.7%. Both the Dow and S&P 500 had their worst day since September 23rd. The NASDAQ posted its biggest one-day loss since October 2. It also logged its first 5-day losing streak since August 2019. Shares in big tech contributed to the decline. Alphabet, Microsoft, Apple, and Amazon were all down at least 2%. Facebook dipped 1.7%. Energy and tech were the worst performing S&P 500 sectors, dropping 2.1% and 1.9%, respectively. Pelosi, Democrat from California, gave the Trump administration on Sunday 48 hours to reach an aid deal before the November 3rd election. Pelosi and Treasury Secretary Stephen Mnuchin were also slated to speak Monday afternoon. However, the Washington Post reported, citing sources, that a deal between Pelosi and the administration was not sounding imminent. The news sent major averages to the lows of the day. We're going to continue to be very sensitive to any talk that has anything to do with stimulus. Scott Wren, senior global market strategist at the Wells Fargo Investment Institute, told CNBC's Closing Bell. Just shows you, the market has been trained for stimulus. It's been trained to respond to stimulus. Same thing is happening over here in Australia. The way we've rallied off the March lows has been by expecting better cyclical news in terms of the vaccine, the Federal Reserve being very easy, and fiscal stimulus. I think all three of these are very important, and we've got one leg that's being pulled out, or at least it's wobbly, he added. Democrats and Republicans have tried for weeks to move forward on a new aid package, but differences over how much stimulus is needed and how broad the bill should be have complicated the negotiations. It's funny, they're both interventionist money printers. Why not just go the whole kit and caboodle? Tom Block, Washington policy strategist at Fundstart Global Advisor, thinks it is possible that a deal between the Trump administration and Pelosi can be reached. Both sides seem to have an incentive to get a deal done, Block said in a note to clients. He also added that the dynamics of the lame duck could be poisonous if Trump loses or Republicans lose control of the Senate. The safer course of action seems to pass a bill now, and if there is a blue wave, more stimulus early in 2021. So coronavirus cases hit 40 million on Monday, which also put a damper on market sentiment. A CNBC analyst of Johns Hopkins University data showed COVID-19 cases were growing by 5% or more in 38 states as of Friday. Nationwide, the daily case average has risen by more than 60% on a week-over-week basis to nearly 55,000. It's always this discussion of case numbers, never the discussion of fatality. I guess, case numbers are more impressive. They're more scary. New coronavirus infections in Europe are rising by about 97,000 per day, up 44% from the prior week. Stocks were coming off a week of choppy trading action. The S&P 500 and the Dow fell for three straight days last week before closing slightly higher on Friday. The many cross currents we have been fretting over in recent weeks remain omnipresent, said Sharif Hamid, a strategist at Jefferies in a note. The US elections are close at hand, fiscal stimulus remains a near-term potential catalyst, and developments on the virus front remain critical in the longer-term outlook. A lot is also very likely to happen over the next several weeks, and the broader macro picture could thus change pretty massively depending on developments along all those fronts, he added. So there we have it, everyone. The market has tumbled due to less stimulus news. More evidence that the market is being trained. What do you think? Do you think we'll get a stimulus deal? I mean, it's not just going to affect the US, it's going to affect the entire world. As always, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or KuCoin. You can buy merch from Heise Says or Teespring, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I will see you all in the next episode.